There, Wall Street winners. It is Friday, September the 6th, and we have just had the US jobs report get published, and it looks like it was better than expected. Although, one of the things that I find so frustrating and ironic about the financial services space in general is everyone seems to have a conflicting perspective, and no one really has the courage to go out and make an opinion, or very few. So that is a frustrating thing. If we take a look, however, at the Bloomberg app and look at the futures markets here, you can see that everything is in the red to a much lesser extent than it was prior to the U.S. jobs numbers, and it's been moving around quite a bit. So if you look at the activity here, it doesn't really show you the overnight, or the morning session there, but it has been fairly active and volatile this morning. I do believe, though, as it starts to come back, that as we get to 9:30 in the open, we're going to be in the green or very close to the green. And I think we're going to have a green and positive day to close out this rather dreary week of very red days that we've seen. If we flip over to the Yahoo Finance app and just take a look at the top here, one of the things you can see is crude is moving north to the tune of 55 cents. So that's a positive. We've seen some announcements from OPEC that should help to bolster the price of crude going forward. We also, if we scroll over to the VIX, we can see that it is up, but it was up 2 points this morning in post-market yesterday. So it's only up about a point today, and it looks like it could be dropping. So that's a positive sign. It would be great to see the VIX down below 15 or 16 in that range by the end of September. And I do think we're going to see that, because what we're starting to hear in terms of the narrative in the market is that the US economy is still strong. Jobs were not down as much as expected, although you never know what's going to happen with job revisions. That's always a mind-boggling thing after the fact. But our quarterly reports have been strong. Companies are profitable. Consumers still have money to spend. They just may not have as much discretionary. So they're being cautious around where they spend it, and that's affecting certain segments of the economy and certain segments of retail. So we're seeing a shift in where that money is spent and where that money is deployed by the US consumer. You can see that in the morning session, for whatever reason, Lululemon is up almost $5. Dollar General is in the green. We've got Walmart in the green, but very little. Home Depot, on the other hand, is down and in the red. And then healthcare is kind of mixed. You've got Humana, which had a good day 2 days ago, was up $10 or so, was down 7 yesterday. Looks like it's about flat. HCA was up yesterday. Looks like it's going to be up again today in the pre-market. The one thing that is interesting in this whole economic landscape is we heard from multiple trucking companies and railways this quarter that loads were down, revenue and earnings were off. And if that's the case, that is typically, in my eyes, a leading indicator of things to come. So if we're seeing a slowdown in transportation, it's usually indicating then a slowdown by the retailers in the purchasing of goods, because you're not purchasing as much. There aren't as many truckloads and train loads to get to their end location and then be sold to the consumer. So I do think we're going into a period of economic slowdown, and that does make me a little concerned and trying to increase my cash position on a regular basis, on a daily basis in the portfolio, so that I'm in a more risk-averse position should the market take a turn. Because the market typically will turn before the economy goes into recession, but not always. So just being aware of that. Oil, on the other hand, looks like we're going to have a green day if we scroll through the oil stocks. The one stock that I did speak about earlier this week is Con Ed. Con Ed looks like it's up $1.60 this morning. Utilities might be a good area to put some money into, and that's interesting. It just took a dive there when I went into it. That's very strange. Anyway, things in the pre-market do not always correlate to the open. But this may be an interesting stock as well as other utility stocks to get in. They typically have a good dividend. If you look down here, it pays 3.2% in the forward dividend in yield. And it could be viewed as a more secure and safety cautious related stock if we get into some turbulent times. Now, that said, if you've bought into some good companies that have strong cash flow and continue to make money throughout a downturn, you're going to do just fine. And companies like that would be software companies that are well positioned across multiple different sectors. And I would say Microsoft definitely falls into that category. I think NVIDIA falls into that category. I would think that some of your semis like Lam Research and TSM fall into that category. Meta is definitely in that category, and it's looking like it's going to be up about $5 pre-market today. And then Google. Google, obviously, Alphabet, a strong company, and under 160 is a steal in my opinion. And then Adobe as well. With all of the online content creators, myself included, I think that Adobe is a product that a lot of companies use, or other companies owned and offsets by Adobe are definitely areas to look at and explore. And Adobe has earnings next Thursday, so we'll be on the watch for those. The other segment that does really well in this financial cycle is financials. And I think we're going to see a big pop in financials today. And obviously, my favorites are the big ones: Goldman, Morgan Stanley, Charles Schwab is another favorite, more of a mid-tier. And then on the lower side, SoFi. I just love SoFi. It dropped down, as I predicted, into the 720s. And it's now time to buy some of that, or was yesterday and maybe today as well, as it's in the low 720s with an expectation of it being above $8 later this year. So that's where we are today.